4 times a year, Zacks does a survey of chief investment officers. Now, CIOs get asked questions, 14 of them, as a matter of fact, and all questions tap into their 12-month outlook ahead views on numerous stock ETFs, broad bond classes, key macro fundamentals, etc. So our chief equity strategist and economist John Blank is here now to discuss the latest survey findings. John, CIOs manage money. They're conservative and apply long-term investing tactics. So what do they see over the next 12 months regarding the market?
They're just very tepidly bullish, Terry. They're basically thinking that most of the run is already played out.
Which S&P 500 sectors do they favor?
They like the tech companies and they like industrials, Terry. It's real simple.
What about global markets?
They do like global markets for the first time, or I should say the second time in the last 6 months or so. They actually have liked global markets, and we've seen that reflected in a lot of the returns out there, particularly Europe surprised to the upside. They don't like them all, but they do like them much more than I've seen them in many years.
As far as the economy goes, are they concerned about slow U.S. real GDP growth morphing into a deep U.S. recession?
I think when they're calling for a 0 to 5% rise in the S&P 500, they're calling for a soft landing, not a deep recession. So I think the answer is no.
So then are they looking for the core CPI to go lower?
Well, there they actually are in alignment with the idea that the core PCE rate, which will come out next week on Thursday, which is pegged to be 5% and in line with the last quarter's reading, isn't going to move down much. 4 to 5% is their call, and that does speak to a much stickier policy rate at a higher level for the Fed for longer.
What do they see in other core macro fundamentals?
They continue to believe that basically we're going to be in a soft landing environment until otherwise. I think in part of that there still is some caution about a deeper recession, but they still don't trust the financials, which is where a deeper recession would come from. But the problem with worrying too much about that is the Fed has already stated they have worried and will worry about that, and they can backstop with emergency measures anything that happens there.
Any other major themes they responded with?
They like energy and materials, Terry. They like energy and materials, which is a global thing.
What are you looking for in our economy going into the second half here?
Well, let's just talk about that. We're at end of June, so we're 6 months in. The first half of the year has been 2%-ish growth rates. Very hard for me to see the third quarter being anything much more extension of the second, because it's a lot of it's the summer, and I just cannot see travel and spending of people in a post-COVID environment going down that much. And then you get the fourth quarter, and typically that's seasonally higher for retail spending and the consumer because of the holiday season at the end, the Christmas holiday season. So it's also hard for me to see in a consumer-led economy's growth rate, albeit tepid growth rate. I can't see any downturn for 6 months. I can see the first chance for a downturn that's consistent with the Fed funds rate hiking is the first quarter of 2024.
What does the recent central bank action tell you about the health of the global economy?
They are following the Fed's higher. They're actually, we saw the Bank of England go up 50 basis points last week because there's even higher inflation there. So I think you had to be careful in oversubscribing to a global view. There are actually higher inflation rates in Europe than here. So some of the things we're seeing out of European central banking is specific to European inflation. The only consistency is everywhere in the world. Inflation is a big problem because post-COVID environments are creating it.
There are 2 large building products and material stocks in our latest Zacks #1 ranking list to look into, and 1 large medical products company. So they include Zimmer Biomet, Vulcan Materials, and Martin Marietta Materials.
That's correct, Harry. Zimmer Biomet, let's talk about this. Very old company in Indiana, northern Indiana. They have been making hips and knee replacements and a lot of other things. They used to make dental implants, so they sold that business. #1 ranked stock. And why do they like it? Because they think they can get the procedures for knees and hips up because of the receding need to put COVID resources together and more people who are willing to to free up time to be nurses for those procedures. So Zero Biomed actually speaking to a cooling labor market, which is fascinating. Vulcan Materials and Martin Marietta are two companies that are in the same business. This business of providing what's called aggregates, which are the things that form the foundations of roads and buildings. So this is an infrastructure play. The U.S. Infrastructure Pact plays out, and you have to spend all the money by the 1st January, 2024. So this is going to hold up for the next year. And these stocks are really pricey and have run hard. This is a $214 stock, Vulcan Materials. Martin Marietta is $440. Vulcan is in Alabama, and Martin Marietta is in Raleigh, North Carolina. So they're also Southeast infrastructure stocks. The manufacturing expansion in the United States that we are seeing is being centered in the Southeast, which is another thing to pick up in these exact rankings. So consistent with fiscal stimulus and infrastructure, consistent with the Southeast story, and frankly, probably already priced in.
Our chief equity strategist and economist, John Blank, discussing our mid-year CIO survey update. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.